Daddy born poor, Mama was too. Walking through the snow, plastic bags on their shoes. Papa selling houses, sleeping in a car. 4 babies in the backseat, underneath the stars. Well, hey, hey, just work a little harder. Hey, hey, punching that clock with work and prayer and a little bit of luck. Make so much money, need a 10-ton truck. Ha, 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 ha.
Hey, good afternoon. Paul McMann here with Forex Smart Trade. It is Monday, January 29th, 2024. So glad you could join me this afternoon as we try to take a look at some trades using our easy to use but highly accurate proprietary trading indicators. Our goal is to help you become the best version of yourself. And we found that we can do that by teaching you how to currency trade using these indicators. And the purpose of today's session is to show you how they work, show you one of a dozen different trade strategies that we have, and we will set you up with a customized trade plan once we train you based on your availability to trade and your risk profiles. So with that, let's jump right in, and we first need to listen to this guy, and then we'll see what the market looks like. All right, thanks.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
One of our kind of secret sauces is that we are constantly training you. And we are constantly training you because we're so confident in how well our indicators perform that we let you trade with our money, and traders perform better when they have the ability to be constantly improving their game, working on the fundamentals, and have a mentor who's providing correction when they start to veer off a course. I do 3 live trades a week. This one that we're on right now, and again on Tuesday and Thursday morning at 6:30 Eastern time. Every day, Monday through Thursday, I also send out an overnight trade setup. It's a trade, and I include a video that shows how I came up with it, but it's a trade that I'm taking during the overnight that I expect to close somewhere. We take it right before, a little bit after 4 p.m., and I expect it to close anywhere between 9 in the evening and 3 in the morning. And those 2 trades start my next trading day. Once you become a member, we do live trades every morning at 10 a.m., every evening at 10 p.m., and then we've got constant training. Wednesday evening, we got an advanced member meeting, and Saturday morning, back to the basics, where we're just going over different trade strategies, taking questions, answering questions, so that you've always got somebody there who can give you direction. Now, I work off of a checklist that helps me stay focused. Checklists have been proven to help people perform better, specifically in medical scenarios. If a doctor's working off of a checklist, he does better and makes less mistakes. Likewise, I found that the same. Every day, good habit, restart the green chart. It clears out the memory and picks up any updates. Good practice at the end of every day is to go back and take a look at the trades that didn't go the way you expected and try to figure out why. Very, very important, after back testing, going back when you're trading the live market, trying to understand why the trade didn't go, how you expect it to go is essential. I can't stress it enough. And on days when I make bad trades, I do it. And if it's on one of these trades, you'll see the next day I will go back and try to explain what I thought went wrong. Sometimes you do everything right and it goes wrong, it changes. But in fact, actually last week we took a trade, I think it might have been Thursday morning. I don't want to go back now because I want to take a trade since it was so long ago. But Thursday morning, the after 3 hours, the trade didn't move as it should have. It was still at break even. Signal had changed by then. You should have just closed the trade, not just left it open, because then eventually the signal changed, and then we ended up getting stopped out. So review the trade every day, and with our indicators, because you can. It's got the simulator. You can go back to a specific time and look exactly what you were looking at. And that's huge. That's a big, big help because you can identify, what part of the chart may have been telling you that this wasn't a good trade. Now, we are technical traders. We are trading strictly based on the price action, and that's what our indicators are very good at predicting where the market's going to move. However, news does impact currency prices. So we want to be able to check what that news is so we can trade around it. And the best place to do that is on forexfactory.com. Forexfactory.com breaks news down into 3 categories. Yellow, which is low impact, ignore those. Orange, which is medium impact. I typically ignore these. And red, which is high impact. And those are ones I want to trade around. And usually I will try to stay out of the market 2 hours before the time of that news announcement. So like on this one tomorrow morning at 10 a.m. on the USD consumer confidence, I won't trade it from 8 o'clock on. This is a published number. People know what this is beforehand. And those who have connections, it starts leaking out and people start trading on it beforehand. So it's easy for it to jump based on that. And it'll jump before our indicators pick it up. So we've got clear sailing now. We don't have anything to worry about tonight. So with that, let's jump right in. The trade I am going to do, and as I said, we've got a dozen different signals, and we figure out a trade plan and customize it to you. The one I like is the 10-point trade signal. You can take it off of any chart, 30 minutes up. I like to take it off of an hour chart. When I trade off of an hour chart, trade's going to last anywhere from 1 to 3 hours. Get in and get out, and it's going to be worth anywhere from 5 to 35 pips. And my sweet spot's 11 pips. If I can carve out 11 pips 3 times a day, I am making terrific money, as you will be. And basically, the strategy is to just get the lines from all 3 sections to line up, and I need to have a signal or an indicator from each of the 3 sections confirming it. And when all 3 sections of the chart agree, that's a high probability trade. So with that, let's go in and take a look and see what we have. The chart I am going to trade off of is something called the Light 6 Major. It's one of the standard charts. It is a composite chart. It's showing me 6 different currency pairs. On this first chart, they're all US based. And you know what? Let's just do one more thing. I myself like to have six candles on showing up here. And you know what? I don't know how to adjust this so that they all move together, but we'll figure that out later. So let's see. So the first chart, Australian dollar, US dollar. I start with the middle section of the chart. This middle section of the chart is called the majors and minors. The red and green lines are the major indicator. The black and gray line is the minor indicator. This horizontal blue line is the overbought line. Horizontal red line is the oversold line. So I'm looking for a situation where the market's overbought. When the market's overbought, that's a good time to sell. Or the market is oversold. The lines are down below the line and going up. So like here on the Euro USD, I want to catch it down here, ride it up through the channel, and carve off 11 pips. And you can see here this move was worth 34 pips. Here was 20 pips. Here was 13 pips. So if I took this on this signal here, when the green crossed over, in 3 hours, I could have carved out my 11 pips. So that's what we're looking for. So here we're overbought on the Australian USD. Majors are still going up. They haven't turned yet. Minors are sideways, so I don't have agreement, and I want them all going down. So on the Euro USD, we are overbought. Minors going up. Everybody's going up, so I don't have agreement. Can I take a buy trade when we're overbought? Yes, you can. You could have taken one here, and you would have still gotten 10 pips. It's just not part of my trade strategy. 15 pips off of a buy here. Now you may come up with a signal where it's overbought and you can still take it. With me, I'm worried. I don't know when it's going to turn, and I don't want to be here in a buy position when it does turn and it runs through. So we got nothing here. Pound USD overbought, and I don't know why let's see, overbought. Majors are going sideways. Minors are still going up. So I don't have what I'm looking for. I want them, if they're up above, if they're overbought, I want the lines all coming down. Dollar, Canadian dollar. Oversold, everybody's going sideways. And how do I determine that sideways? Green line's kind of going up, red line's going down, gray line's going up, black lines. So this is sideways. Dollar, Swiss franc. Oversold, majors going down. Dollar, yen. Oversold, majors are going up. That's good, but the minors aren't. I want everybody going up. I want all of these in agreement. When I can get everybody in agreement, then I'm going to look at the second part of the chart, the TNTs, and then I'm going to look at the pressure. But I don't need to look at these other two. If I don't have it here, there's nothing else to look at. Excuse me. So let's go to the next chart. So I've cloned this chart, and now I've got 6 more pairs that are non-US based. Euro pound. Majors are overbought and sideways. Minors are coming down. So I don't mind that the minors are coming down, but I need the majors to be coming down, and they're not. So then here's a case where you can see it's been sideways for 3 hours, and you've got kind of doji candles here where they're just kind of sitting there, not moving. Australian dollar, yen, overbought. Majors still going up. Minors have started to turn, so nothing there. Euro, Canadian dollar. We have everybody going up. We were oversold, but that was 3 hours ago. I am I don't like it when the majors have been hanging around a long time. I like to see when they go up and they go down. When they go, so I'm not crazy about this. If we'll come back to it, Euro, Canadian, we've got to buy. Well, actually, you know what? Let's just let's see what else we've got here. So let's assume that we like this. I will consider a trade if the green line is less than halfway, and it is. The angle of the green line, actually, you know what? Let's. The angle of the green line is okay now, but it's hovering on not being okay. This is greater than 45 degrees. So 3 points here. When I jump up to the TNTs and count how many lines are supporting this, I've got the thin orange going up telling me buy, and the thick blue going down. The blue line is inversely related. So when blue goes down, that means buy. So I may have 2 of the 4 lines here telling me buy. I need to have 3 of the 4. So I don't have enough of what I want here, so I'm going to pass. So we're not even going to come back to it. Australian dollar, New Zealand dollar. Everybody's going down, and we're more than halfway. And how I judge more than halfway is where the green line is. The green line is more than halfway here. I'm going to pass. Can I get 10 pips if it's here? Yes, I can. It's just not part of my trade plan. I don't need to take many trades to make good money. I just need to be able to identify the ones that I like and just take those. And they come up if I'm patient. Pound yen. Majors are going up. They're almost overbought. Minors are coming down, so we don't have agreement. Euro Australian dollar. We didn't ever quite get to overbought before it turned. The minors touched. I usually like to have the majors touch too. So we've got everybody going down, but the green line is more than halfway. So I'm going to pass. As I said, I don't like that. I like to really get it up here so that we can get that run through the channel. So let's go to the next group. Now I'm going a little slower than I might normally. Normally I can breeze through this in 4 minutes, but because I want to kind of tell you what I'm thinking, it takes a little longer. So pound yen, majors just reaching overbought, minus a turn. So again, we don't have agreement. Euro New Zealand dollar. Everybody's going down, and we were overbought. Everybody's going down, and I have what's called the double cross, where the red line crossed over the green line and the black line crossed over the gray line. Here our issue is that the green line is a little bit beyond the halfway mark. Maybe we'll come back to it and see. I am in New Zealand right now, and it is 10 minutes to 10 in the morning on Tuesday. It's Tuesday. We're a day ahead here, New Zealand. So I know what's going to happen tomorrow. I know what's going to happen tomorrow for you guys. No, I'm just kidding, of course. So anyways, and I will be, after tomorrow's morning trade, I will be heading to the airport and on my way back home. We'll think about this one. Pound New Zealand dollar. It's actually kind of similar to the Euro New Zealand dollar. And I think I like it a little bit better. Than the Euro New Zealand dollar. Actually, let me see if there's anything else, and then we'll come back to this. New Zealand dollar, yen. And my hesitancy here is that we're past the halfway mark. But let me see what else there is. And if there's not, we'll come back and go a little deeper on this guy. New Zealand dollar, yen, just reaching overbought, still going up. New Zealand dollar, USD, reached overbought, starting to turn. Euro, Swiss franc, everybody's going down. I don't like this. We do have 3 points here, but I don't like this because we've got a kink in the line right here where we're going from more steep to less steep. So this is telling me this is running out of gas, whereas we don't have that kink in the line here. So we're going to pass. Let's take a look at the last guy here. Australian dollar, Canadian dollar, everybody's going up. Double cross, greens on top, grays on top. And we've just passed the halfway mark. Thing I don't like is that we didn't quite get to oversold before it started coming up. And I'd like to see the steepness on this a little bit steeper. I still like that. I like the Euro New Zealand better. So let's just keep going. Swiss franc, yen, reaching overbought, still going up. Euro, yen, reaching overbought. Minors have turned, majors still going up. Pound, Australian dollar, it's kind of we're more than halfway, so we're going to pass. New Zealand dollar, Swiss franc. We've got 3 points here. So we've touched the oversold. Everybody's going up. And I've got the double cross. So that's 3 points. There's good steepness on the green line. 2 orange lines going up, dotted blue coming down. So when blue comes down, that means buy. So all 3 are telling me buy. And I've got up pressure with red on top. So 1 point here, 3 points here, 3 points here, so 7 points. Let's decide here. I'm going to just take a look back at the other one, and we're going to decide which one I like better. Let's go back 1 second. So 3 points here, overbought, everybody's coming down, double cross, good steepness on the green line, 2 orange lines going down, dotted blue going up, and I've got down pressure with green on top. I'm going to go with this one first. And the reason I'm going to go with this one first, I'm going to go with this one over this one because the green line is further past the halfway mark on this one than on this one. And I'm going to take the pound New Zealand dollar over the pound Swiss franc because the pound trades heavier than the Swiss franc. So there's more chance of getting the movement that I want. So, all right. So once I see the setup, so we're going to take a look at this pound New Zealand dollar. I want to confirm it. And the way I confirm it is by taking a look at a full chart with that has other time periods on it. So we are going to go to a Great Britain pound NZD. So how I confirm it is I look at where the majors are on the 2 hour. And I want the majors to be overbought. I want the majors to be overbought. Here they're not. They're in the middle of the channel or in the lower half of the channel, and they've started to turn. And here we're oversold. So when we're oversold, I'm expecting it to go up. I want these to both be overbought. They don't need to be pointing down. I just want them. I want them overbought, and because when we're oversold, like we are here, there's a chance that this is going to turn and start going up, and I don't want to be on the other side of when the signal changes. So I don't have what I want. Let's take a look at the other ones real quick. So we also had Euro New Zealand dollar. So I don't have the confirmation I wanted. Euro New Zealand dollar. Nope, it's about the same. I want this, the green and red line up here, and I want the green and red line up here. So we're going to pass. What was the last one was NZD Swiss franc. Is that what it was? Oops. NZD Swiss franc. So let's take a look at that. I'm guessing we're going to see the same thing where the 2 and the 4 aren't where they need to be. Sorry, my system here is a little slow. So, yeah, neither are where they need to be. I am going to do, so we don't have a trade on the 10-point signal. I'm going to real quick take a look and see if we have a trade on another signal. And I'm just going to go real fast to see if I can find it. But what I'm looking for is for this number to be either 0 or 10 or within 1. And then I'll explain to it if we see it. This is a little scalp trade. So 1.4 isn't close enough. 6 isn't close enough. 2 isn't close enough. 9 is close enough. When the thick orange line, it's a scaled number. When it is as high as it can go, it's at 10. When it's at 10, it thinks there's no more up in the movement. If there's no more up in the movement, that's a good time to sell. So if I see this, then I'm looking at where the red line is on the major indicator. And I know I'm doing this fast. I want the red line to be above the blue line here, and it's not. 8 isn't close enough. 8 isn't close enough. And now we've just gone into the next hour. So I didn't give us enough time to go through those. But usually when there's 5 minutes left, I've got this other trade that I can do. Let's see here. Another trade that I can do called the thick orange line trade. And basically what I'm looking is if the thick orange line number is 0 or 10 or within 1 point of either end. And if it is, then I confirm it by where the red line is on the overbought or oversold line. It needs to be like poking over like this. This needs to be 10 and the red line needs to be here. So we didn't see that. I am now going to change. So those were two different signals. I'm now going to change to a third signal, and I don't want you to get confused. This third signal is a trade I take for the overnight trade. The overnight trade is based on a day chart. So here's the Euro USD day chart. And what I am looking for is what the green line is doing on the day chart. So we're 23 hours into the day chart. This line has had 23 hours to formulate. So the signal is powerful. So I can carve out 11 pips based on what the direction of this is. But I found that it works much better if I can confirm it with what's going on with the 12-hour and the 8-hour. And here, the green line is oversold and going down. But here we're oversold and going up. So I don't have agreement between the day chart and the 12-hour chart. The 8-hour is also going up, telling me buy. So I'm just looking at the 8, the 12, and the 1. And if I have agreement on all three of these at this time of day, that trade is worth 11 pips. And here we've got up on the 4-hour, up on the 2-hour, on the 1 hour, it started to roll. So we don't have a clear signal, so we're going to pass. Let's take a look at what we've got on the pound yen. On the pound yen, because there's more variability in that pair, we're going to go for 22 pips and a 3-to-1 stop loss. So here, green line is just approaching oversold. It's going down, and it's going down at a good steepness. So this is telling me sell. 12-hour is confirming the sell. Also good steepness. 8-hour also just reaching oversold, and it is going down. So down, down, down. So all three are down. So this is worth. We're going to take a sell on the pound yen, and to take a sell on the pound yen, you can put it in your simulator, or if you're using MetaTrader 4, this is a demo account. I am going to open up the pound yen chart. I am going to click on new order. My lot size is going to be a function of how much is in the account, and I'm going to move this decimal place over 4 spots. 1, 2, 3, 4. So I can take a lot size of anywhere from half of 1.44, which would be 0.7, all the way to double it, 2.88. But I'm going to just go with 1.44. So I just move the decimal place over, but I can play around with that, half of it or double it. And I'm going to market execution, and I'm going to say market sell. So it's recorded. Now I'm going to right click on it, go to modify. This trade is worth 22 pips. 22 pips is 220 points. So I just add an extra 0 to it. I click the little blue button and it does the math for me. And we're going to use a 3-to-1 on this. So that's 66 pip stop loss. Again, I add a 0 to convert pips to points. Click the little red button. It does the math for me. So we took a sell on the pound yen with a take profit of 187,247. 187,247. One stop loss of 188.126. 188.126. So I expect this trade to close anywhere from between 9 p.m. to 3 a.m. 9 p.m. to 3 a.m. Thank you so much for joining me. So this is a very, very simple trade. You're just looking at the direction of three of the lines, and if they line up, good trade, and you just need to be available to take it at a little bit after 4. I will send that out as soon as we dispatch here. If you're able, join me tomorrow morning at 6:30 a.m. Eastern Time. Because I will be going to the airport shortly thereafter, there will probably be no overnight trade because of, well, maybe. We'll see. It depends on whether I've got a little spot where I can set up my laptop or not. I won't be on the plane quite yet, but generally I find it at the airport, it's a little inconvenient, but if I can, I will, and you can look for the email. Thanks so much for joining me. It's an honor. If you want to learn to trade, you need to find somebody who's good at it. We are. You need to find some tools that make it easy for you to understand. We've got them, and because we let you trade our money, we're interested in you doing well and making money, because that makes us money. They don't do it as much here in the United States as they do, say, in Asia. In the United States, on a hedge fund, they pool the money and they give it to one guy to manage. In Asia, they might have 1,000 people who manage a fund, and they each give them a little piece, and they're all competing against one another. And that competition lowers the risk of the portfolio, but also increases the return, because everybody's trying to make a good return. And if one guy screws up, the portfolio doesn't take a hit. Whereas on a hedge fund, if the one guy screws up, the hedge fund takes a big hit. So anyways, join me tomorrow morning. If you want to trade, we can help you. So we'll see you then. Bye-bye.